Today I want to talk about something that's very near and dear to me, not because I have it in my own personal situation, but I see it in many of my friends and my customers having issues with credit cards. They are so bad to be using. And the reason is, I get it. I get sometimes you have to put it on a credit card because you're gonna pay it off at the end of the month. And some people do that, but most people don't. And there are so many clients and customers that are coming to me as a mortgage advisor, and we're looking for strategies to be able to buy a house. And one of the things that I see is the massive amount of credit card balances. And it's so hard to pay those off. It really is. If you're a first-time home buyer and you're thinking about purchasing a home, one of the things that a mortgage advisor like myself is going to look at is the amount of debt that you have, because your debt matters. It's like you're gonna have a house payment and then you're gonna carry your debt. You were paying rent, but now you're going to be having a house payment. And as a lender, we want to protect you. We want to make sure that you're not going to get in trouble with your new house payment. So if you can, please try to pay off some of your personal credit cards. I'm not a big proponent of having credit. I have a credit card. We have one and it gives us points or miles, or I can't remember what it is. I think I have a Southwest that gives us miles so I can use it against tickets, which is a great thing. And then I have a Capital One card that gives us miles, and I pay off our travel through the rewards travel program. So that works really well for us. And we try to pay them off every month, which I think that I do. And the reason is, if you don't, you're going to have quite a bit of interest that you're going to be paying on your outstanding balance. And so one of the things I made a video about earlier was the fact that, let's say you find something on sale, okay? Let's say it's a television, because those are very popular to be putting on sale. Let's say it's at Costco, right? And this humongous television is on sale for $699. And that's a steal, right? Because it used to be $999 or $1,000. You're thinking, wow, I'm gonna save a couple $100, right? Okay, makes sense. So you put it on your Costco credit card. I think they have those, don't they? I can't remember, or Visa. And you're thinking, yay, I got such a great deal. But you still have an outstanding balance on that credit card. And then the following month, because you didn't pay it off, you're going to be paying interest, $50, $100, whatever it is. And so did you really save on that TV? Think about that. Your interest is accumulating onto your balance. And that's why it's so easy to use a credit card, because a lot of times people don't really pay attention to their balances until they get their credit card statement, and it's like, oh, okay, well, I'm not gonna pay that off this month because I need my cash, or I'm strapped in other areas, and so I'll just make the minimum payment. But your interest is accumulating. I want you to get out of debt. I want you to stay out of debt. I want you to be able to purchase a home. So if you can, monitor your credit cards, be very mindful of what you're using your credit cards for. One of the suggestions I have for clients who use credit cards quite a bit, because you don't realize how much money you're spending. Like, I use Apple Pay, right? It just seems like it's free because it's coming out of my account. Take cash out of your bank, put it in your wallet or your purse, and go throughout your day and pay cash instead of where you might have used a credit card. And that may give you an idea how fast your money is going and that you're spending it and where it's going. Just be mindful of that. It's important. It's important. Let's say you're not even thinking about buying a house. That's okay. But we want you to stay out of debt. Longer term, it's a better financial strategy for you. So if you can save a little bit of money, and if you can pay off your balances with the highest interest rate first, that is a good strategy to follow.